Good morning, everybody. Man, caught me off guard there just for a second. What's up, guys? Happy to see y'all hopping in so quickly. Figured I'd give it a little bit today just to see what's up. Oh man, everybody's up there. What is this one? FB. Yes. Good morning. Good morning. It says what's up. Appreciate everybody hopping in. So big day, big week today. Huge week, actually. CRTX is on the radar for Friday. If you don't know Penny, by the way, actually, Penny, if you're in the server, you're more than welcome to hop in this. I always put a link in the analyst chat at the very top of the server. Feel free. Looks like Cube is coming in. By the way, if you guys aren't familiar with the extended group, if you will, we have a lot of like pro traders that come out of our groups. We spend a lot of time working with other traders, trying to help them like either get established or, just in general. Like that's what this is about for me, is taking someone that's good and getting them to like world class. And I just absolutely love working with new talent and anybody that's like up and coming on the scene. We are all about that. And that's what we do kind of like live all day in the server too. So that's why you'll see like Jesse pop in and a handful of other ones. Looks like Cube's in, but we'll see how he goes. And Penny, by the way, is one of my all-time faves. We used to do a radio show together way back when, and just a ton of fun. But we'll see. Anyways, cool. So enough of that for now. But this week, man, it's a huge week ahead of us. Last week we didn't have a ton of this. Oops. You know what? This is the wrong caption. Not caption. You guys, let me do this for you because the team put together an insane what is it? Like a very cool graphic. I don't know how, shout out to our what's this called? Graphics team. But man, every day I just don't know how they do this, but here we go. This is today's slide. Keep, I see you 1 second. I can't type in the audience chat. You should be able to. But if you can't type in the audience chat, you can do it in YouTube. This is some HC stuff. I can see your gray hair. Yeah, hilarious. Anyways, yeah, shout out to Derek and the team. Always putting together some hilarious graphics. Man, China is on a run today too. I was looking at Baba. I almost took a shot at Baba early this morning. I was like, oh, it's a little precarious position. But man, did all the China stocks just completely took off. I'm sitting, by the way, if you're following along in any of the trades, sitting right now in a drawdown on some like short-term SPY puts. But we'll see. Here's what I'd say. This week, busiest week of earnings season overall. Two companies, it was Amazon and Apple, actually both pushed their earnings date back. So I don't have that on the highlights of like what we're going to look at, but I will start talking about this right now. Is that when a company pushes an earnings release back, historically speaking, technically, it's not the most bullish thing. So Amazon and Apple have both moved their earnings release dates back from this week to next week. So I'm a little cautious on those two. Just saying. We did have this huge Nasdaq rebalance, and we went over it a little bit last week. But Nasdaq 100, if you didn't know, the magnificent, quote unquote, magnificent seven were over 55% of the weighting of the QQQ or the Nasdaq 100 or the QQQs. The problem with that is that there's a very old school rule where like, we can't have certain things be that heavily weighted in the index. And so it was supposed to be this morning in the pre-market. They ended up doing it last Friday post-market. So either way, over the weekend, they sold a bunch of Apple, Amazon, Microsoft, Tesla, all that kind of stuff. But the market really knew that was coming. So in my mind, if you were trading with us on Friday, it was always going to be like, okay, Friday was going to be a bit of a nosedive, which we did get. And then Monday was going to be like the little bounce day. And we're getting that. We're getting that on Tesla. We're getting that on Apple. I haven't checked Microsoft just yet, but I mean, overall, I think that bounce has more or less played out. So we'll see how that goes from here. I have a couple other swings on deck that are still live, kind of watching them off the side of my screen, by the way, obviously. And, you know, I don't think I'm going to be making any major decisions, at least not this week, not in my personal portfolio. I'm still positioned as I'm positioned. I just think, you know, maybe we grind higher, but if there was a pullback to buy, it's likely going to be coming up in the near future. Just remember that saying, it's like sell Rosh Hashanah, buy Yom Kippur. That's going to be coming. And yeah, so we'll have probably a little bit of a pullback, but nothing huge, I don't think. So anyways, so we did have bank earnings. So we had the regional banks kick off, or we had the big banks kick off the first week of earnings season. Then we got the regional banks. That's KRE is the sector for that one. And actually they drove the market significantly higher. It's like all that old, what was it, Silicon Valley Bank concerns, things like that. That's more or less gone at the moment. Now we're looking at, well, two things this week. We're looking at, number one, the biggest week of earnings season for sure. This week and next week are going to be huge for earnings. I will go through and I will probably do a handful of our old earnings type trades, which are going to be mostly calendar spreads, a lot of short vol stuff. So if you're not familiar with that, don't worry. If you want to, we do some trainings. We'll probably do some more trainings this week in the servers also. And then the biggest thing this week is going to be FOMC. So we actually have the next Fed interest rate decision is coming on Wednesday. Overall, over the weekend, and a couple of the headlines from last week that I'm looking at, really, it's just like we had a lot of housing data come out last week. You know, I sent out a tweet. There's like, you know, the housing starts and building permits both went down, but at the same time, prices were at like a huge high. So what's happening in the housing market right now is that the supply, so record high near home selling, supply is short, like supply shortage is going on, but at the same time, people are just getting like impatient. So there's still mostly still cash buyers out there, but at the same time, it's like, you know, I think we're near peak interest rates. So the demand, if you will, for housing is still stable. And it's probably going to go up. So I think the housing sector is a good one to watch at the moment. Prices, I don't see, unless there's a lot more supply that comes on the market, probably not going to be, you know, tanking anytime soon. Overall, I think most of the economists in terms of like, if you survey the economists, are looking at this coming month being most likely the final Fed hike. And so the market's currently pricing in, what's that, Trend Pro? The market's currently pricing in, I'll do this. So we go into CBOE Fed Watch. CBOE Fed Watch, that's all I do. Just Google it, right? You'll get to this little Fed Watch tool and you'll actually see, I'll click compare if you want. And right now, so we're sitting at 525. So 525 is where we are, 525 to 550. We have a 98.94% probability that Wednesday we actually get a rate hike. So how's the market going to respond to that? That's what's really important. I think every time we get to this, it's not so much about the actual, you know, action. It's not so much about the actual rate hike. It's more about, you know, Powell's commentary. I don't think that's changing whatsoever. We don't have anything in August, but we have another one in September, Fed meeting, interest rate decision. And currently the market's pricing an 83% probability that we don't change this at all. And then we go to November, and November has a 30% probability that there's another rate hike down the road, either November or there's about 27% in December. And really what we'd look for, 50% probability that the market's pricing in currently that they're more or less done. 50% probability that they're done. And this looks like there's a 38% probability that there's a rate decrease in March of next year. And definitely the market is expecting a decrease by May. So from now till March or May, the market's expecting that we be stable in terms of interest rates. And if we do get a hike in November, they're pricing it out pretty quickly. So they're saying like, if they do hike in November, then they're going to be pulling that back either December, January, March, pretty much instantly. So all that means to me is that we're probably near peak Powell. Like, I don't know. Like, it seems really crazy to me, but we might be. Peak Powell is a big deal. Like, we haven't had that. It's always been FOMC, Fed watch, this, that, and the other for as long as I can remember, for like years at this point. But we're probably closer to the end right now, and close to the end of interest rates, if that high interest rates, if that matters. I wouldn't, by the way, I wouldn't go long TLT based on this, because this is saying for TLT, I know like I already have some, so under 100 is probably fine, but I don't expect the long bond to really catch a bid until we get to this later end of the year. That's what this is saying. So interest rates actually have to go down for that to continue to go up. Can't wait for the Fed to come in. Yeah, I mean, Fed becoming irrelevant. That's, I mean, when can I just don't remember that happening. Not anytime recently. So just diving in really quick into the actual numbers. So we did get retail sales month over month. There were 2 retail sales as well for TLT. Yeah, inflation is, so if you guys are, what he's saying here is inflation expectations as well for TLT. This is actually going to come into play, I think, more so than it has in a very, very long time. And if you follow me or you've watched any of my stuff, I'm always like harping on this NFP number every month. It's going to tell you the direction, blah, blah, blah. And I think that is probably one of the easiest market hacks. If you don't know, like just marking an NFP level high and low on your chart and just trading off of that for your direction. I think that's a huge hack. But I'll say this, that's probably going to have less and less importance as we move forward. Not that it's not going to be important, but I think one more thing, this CPI number will probably have more importance than it has in the past. So what's cracking with TLT? We're winning. Yeah. So like, I'm just going to say from here moving forward, I'm going to start marking the CPI levels just like I mark NFP levels on my charts, because we are basically at like peak inflation. And this is the point where we want to say, okay, NFP is still going to be important. That's the jobs numbers. But CPI and the actual inflation rate, that's actually going to end up being significantly more important than it has been in the past. So I want to pay a lot more attention to that. So anyways, back to the numbers. So retail sales, 2 retail sales numbers I have here. Month over month, actual number came in at 2%. Remember, the only thing that moves markets are what's different than consensus. If it's a big deviation from the previous number, that's nice to know, but it's not going to move a market. Retail sales numbers on Tuesday coming in significantly below consensus of 0.5%. This is good for inflation. So if we're trying to bring inflation down, what we want to see is we want to see less spending. And so retail sales is really where it shows up. They have this X gas and autos retail sale numbers. So pulling out gasoline, gas and auto sales, which are a significant portion of that. When you look at it that way, and this is where it gets a little funky, the consensus was a flat line, but we actually went up a little bit. So these two things probably offset each other right here. Industrial production. This was a big miss right here. So we're pretty low on that bar. Just something to note. And then here's that housing number stuff. So building permits slightly up from slightly up. Well, this is for the month. Looks like about in line. Both of these about in line. Jobless claims coming back down. So the consensus was 242. Jobless claims, we know about 200, between 200 and 250,000. It's probably not going to be a market mover. The market doesn't tend to pay attention to initial jobless claims below 275, I would say. So that's the number. Like if we get jobless claims hitting above 275K, new jobless claims, then that's something to really pay attention to. But until then, probably not so much. So in terms of the housing sales, 4.16. I mean, this is, the month over month numbers is where I was getting that data from. This is the full month numbers. I'd have to pull it back. Anyways, not a big deal. The supply of building permits and housing starts, so new construction actually went up slightly, and then existing home sales went up as well. So this is the last one. This CB leading index, I believe we get something similar to that. This is funny to me. So I pulled this one up. I don't usually touch on this. I'm going to do it really quick, but this is a hyperlink, and I can pull this up. Oh, is this the right one? Sorry. If this hyperlink is not working right, then forget about it. Yeah, it's not working right. No worries. There's this thing called the Chicago Board Leading Index. This is like at a, epic low, to be honest. That's what I was trying to pull up earlier. This hyperlink is not working well. Anyways, leading index. CB. It's essentially saying are we in is the economy growing or not? But the net of it is no. And it's like getting worse and worse every month. So, anyways, that's what that was. In terms of earnings, so we're getting into earnings season. Last week we had a handful of earnings. So I'm tracking the Dow 30 as I do every. What's up, Carlos? Every week that we do this, and so I'll have a running 4 quarters of data here on the Dow 30 top 30 stocks of the market. The only one, and this one always, but I never really understood why Travelers was in the Dow 30, but it is. JP Morgan, UNH, Goldman Sachs, even IBM. J&J was a huge one, actually. J&J's beat was, man, is still something that's carrying to even right now. So like J&J is a pretty big breakout. I think that's one that you probably want to keep an eye on. And that kind of gets to where I think the market might be going, is that's more of a healthcare stock and staples, right? J&J had, they had spun off a portion of their company called Kenvue into a new IPO. And Kenvue was the baby powder company and all the personal like toothpaste and stuff like that. That IPO actually, I believe, let me see, KVUE is the ticker, was bouncing significantly. But this is not so dissimilar to when GE spun off a big piece of their business that was dragging them down. And the piece of GE that they dragged down, when GE did this split, they did it a bit differently. And I'll just say this, we were way down here on GE. Somewhere around this level here is when GE, probably about like 58, spun off their healthcare segment. And so one thing that was keeping GE down for so many years was that, they have so many businesses that together it was a huge company, but some of them weren't doing well when others were doing well. And their healthcare segment specifically was a major piece that was dragging them down. And that spinoff was somewhere around here. And you got, for every 1 share of GE that you owned, is this not showing? Sorry, guys. One second. Let me share this right screen. Window. Screen. There you go. For every 1 share of GE that you owned around here, you got one, or for every 3 shares of GE that you owned around here, you got 1 share of GE Healthcare. But once they spun that piece off, they were able to really just run free. There's still another spinoff to come. And I think it's a year down the road. Yeah, 3 for 1. So for 3 shares, you got 1 share. For every 3 shares of GE, you got 1 share of GE Healthcare, which is GEHC. And look at this stock. We got issued GE Healthcare way down here at a cost of 0, by the way. And it's like even up here, this, once it was like free and clear, this didn't have the overhang of the aviation and the energy companies or corporations pieces of GE. That went off and did really well. And still GE itself, there are still a lot of components inside of GE, but the next big spinoff is going to be the aviation department. And that's going to be a massive one. And that will leave GE Energy. And I think GE Capital, I believe they already sold out. I mean, there's just so many little businesses inside of GE that you would have never known, although they're not little. But anyways, still one more spinoff to go on here. But I'm bringing this up because once GE didn't have that in that healthcare department, they were able to really run. And I think the Kenvue spinoff was somewhere over here. They did it differently again, but around 150, it popped, pulled back, and man, if this thing didn't just absolutely take off the last 3 days post earnings, this is a huge breakout. I mean, this changing, and it's in the right sector. So this is something to watch. Kenvue here is the company that they spun off. They did it via an actual IPO, so not as cool as the GE one, but just the same. Something to watch here. Earnings here, it was big sell off and then instantly bought up. So interesting price action on that. So I'm going to be watching a handful of things. But overall, Travelers was the only one to really move. Let's do this. JPM, UNH, Goldman. So we'll look at JPM last week, following through, right? So we have earnings here, and this is what I'm going to look at. So we have a handful. This one had a nice little run up, earnings, and then 1, 2, 3 days consolidation, and now we're extending. So I think this same kind of price action happens with KRE after the regionals went. UNH, man, this is like one of the best looking charts when you pull it back to a very, very long-term chart. Now, before everybody was calling for like a huge sell-off, now on the monthly, this looks like it's potentially ready to start ripping. And if this thing goes, that's going to be wild. But we'll see. Above, 550, she's gone. No looking back. But we'll see. I think there was a lot of bad news priced into this stuff. So huge companies, not small. Goldman Sachs just reported. Look at this, right? So just reported. This actually shows a miss, but it was a revenue beat. This is here. 1 day consolidation, and then boom, 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 3-day continuation. So I think what I'm trying to show you right now is that that's what we're looking for. IBM, sometimes a bit different, right? IBM, 1, 2, 3, consolidate. This one, I'm really not a fan of IBM, if you didn't know. Just skip that. And American Express is interesting. So here's the price action that is interesting. American Express beat, but stock down, coming right back into support. I'm going to keep this one on watch. We'll see how Visa, I think Visa and MasterCard may have gone already. But that's the price action so far. All right. So on deck, big, huge week, right? So Domino's already reported today. They actually missed, by the way, and the stock went up. So that's the kind of stuff that I'm looking for. So where am I going to be looking for this? Disney is one where I'm going to be looking at. This was a miss on revenue, barely beat on earnings. Stock is up. Super interesting price action. Disney is one where earnings are coming up. They're not this week. They're next. Yeah, I'm going to be looking for bad earnings, like completely miss the boat, and good price action. If we get those two things together, that's typically going to be the sign of the bottom. Bottom should be in. Interesting one tomorrow morning to me. I've got to watch 3M. So this thing completely, toasted way down at like these. I think this is, what is this? 2000s level, 2012, give or take. Just now retesting a huge breakout level. This thing has so much bad news put into it already. It's like there's nothing good priced into this stock. Again, if this guy misses and the price goes up, bottom's very likely in. So definitely keeping that one on watch. All right. Do you guys have anything you want to watch for too? I'm just going to go over a couple. GE, I'm not doing anything with my GE position. I will say GM, I will probably trade for an earnings trade today. I'll throw that out likely at the close. Verizon, probably not. Yeah, I'm probably going to throw a trade out on GM today. Just looking for that type of like range bound trade. This thing has not really gone anywhere for a very long time. Even on earnings, it really just doesn't move a whole lot. Just kind of looking for this probably like $40 level. It's likely just going to be a calendar for me, selling this week, buying 2 weeks out from here. So that's what I'm looking for. Microsoft, Alphabet, Google tomorrow after the close. Huge ones. Microsoft, by the way, has run a ton. Google, on the other hand, hasn't, right? So if I look at Microsoft daily, we're at all-time high, definitely pulling back, understandably after that, major rebalance. Here's this level, 349. So if Microsoft holds over 350, yeah, okay, she's going. But I'm going to likely steer clear of this guy for this earnings season just because it's had such a huge run. Google, on the other hand, is nowhere near that type of Microsoft chart. I think this one is still, very fairly priced and probably has a lot of room to the upside here. Just kind of retesting the bottom of this consolidation and this whole level right here around 119. I like that as good support. So I'm staying long. I'm already long Google. I'm not necessarily going to add, but I'm definitely not going to take any measures to hedge that one. Boeing, you guys know I am long Boeing. Boeing, we have a big one Wednesday before the open. So tomorrow, I'm long some Boeing calls. Tomorrow before the close, I'm going to sell some calls against that. I'm going to convert that into a directional calendar on Boeing to the upside. And again, I don't want to, not going to sit on naked calls over any earnings report at all. EQT would be interesting. So Boeing, then we have Meta after the close Wednesday. Ooh, I really like Meta's pullback here. I sold a lot of Meta heading into this. I was looking for this 385 to probably hit again. Looks like we're going to get it. But man, this pullback into Meta's earnings report is actually a really good setup. Just got to say. This is setting them up really nice right at the bottom of this channel here. So here's my line. It's 285 is what I was looking for. And the bottom of this channel that Meta's been sitting in since November 2022. So 285 is my level. I'm looking to probably get back into Meta ahead of their report if I get the shot on that. Crazy, right? The thing's moved. But this pullback is a good setup for earnings, into earnings. Chipotle, always a big one. ServiceNow, probably to the upside. eBay, no, not really. McDonald's, a lot of people have been talking about McDonald's lately. Wasn't a big fan of the Grimace Shake. I did try it, by the way. It's this huge rising kind of wedge, if you will. But yeah, so McDonald's right at the top of this trend line. It's a tough one. So if I'm going to trade earnings, which I likely will, what I'm going to do, if you guys don't know, is I'm going to go to a website and I'm actually going to look at, what are the last year and a half of earnings moves look like. So this is McDonald's release dates, marketchameleon.com. It's free, right? So 1, 2, 3, 4, 5, 6 quarters of data they give you for free. This thing is a 2% mover, give or take. I don't think McDonald's makes the breakout, so I'm not going to trade into that. But this is likely something I could do a IV crush type trade on. And if you're thinking about trading these and you don't know how to do spreads, things like that, just wait till after the release. You'll get a follow through for sure. Yeah, MasterCard. There you go. That's going to be an interesting one. Did we already have Carnival? I don't think so. Just looking at this. Okay, so here's what I'll say. Dexcom, I'm pretty bullish on. Not many people know about that. Dexcom, I love the stock. Or I love the company, rather. The stock is at a huge base. If you don't know what they do, it's like the diabetes. It's that little thing that goes on the back of your arm if you're diabetic, and it like constantly takes your blood sugar. Fortunately, running into a pretty heavy resistance level. But man, off the bottom, this is a big run coming into that Same kind of like meta type channel. Yeah, that one looks like it might have more room. Roku. I don't know why people have been bullish on Roku lately. If you guys know of something going on with Roku that I don't, let me know. But I can't get behind this. To me, it's still a hardware company. I just don't see it. An obsolete hardware company. Cool. This one is a big mover. So something like a Roku, and by the way, a Snap. If you're going to trade earnings and you want to do like directional stuff, Roku, 20%, 20%, 10%, huge earnings mover. Snap is probably one of the biggest earnings movers. If you didn't know, like this 70%, 10, 30%, 40%, 60% earnings move. Snap, Snap is one where you could probably buy an at the money call and an at the money put and likely make money on something like Snap here. Very likely, actually. This thing is probably one of the biggest earnings movers in the market. All right. So that's earnings. I'm just going to go into a little bit of this week. So enough of that for now. I think right now what's important is that the rest of, we have earnings and we also have, oh man, I got all my stuff popping up. We also have like a bunch of economic data coming out. So today wasn't really a big thing. Tomorrow we have housing. Wednesday we have FOMC, and then Friday we cap it off with PCE. So Wednesday, that's when the fireworks will actually hit the street. And let me pull up the actual calendar here. So this week, cool. I'm gonna look at major stuff. July 24th, that is today, yeah? Yeah. All right. So nothing major today. Again, when we look at this stuff, the consensus or the forecast, if something comes in actually different than consensus, that's when market actually makes a move, not really before then. Let's see. Move this around so you can see a little bit better. I think that's good. All right, Tuesday, nothing major. We get this consumer confidence. Do I have? Oh, this is, it's not a hyperlink on this one anymore. So this is where, economists say, are we, in expansion or not? Wednesday, it's really, so this is not much. It's going to come down to Wednesday. And again, 11 o'clock, we get the actual rate decision release. If it's not 25 basis points, remember the market moves on anything that's different than what is expected. And right now, 25 basis point is expected. So if we don't get a 25 basis point hike, which I have no idea, I think we will. If we don't get a 25 basis point hike, I would expect some serious movement on the market overall. And that's really the biggest risk to me is if we don't get that move. I just don't see that, they don't come in at 25 basis points, but I suppose it's possible. And again, I can't even begin to predict which direction that would be if we don't get a 25 basis point hike. If we do, and the commentary is the same, I actually think that we just continuing on. Most people are really just going to be thinking about what does it look like moving forward? Is this peak rates? If he raises, it's going to be dovish commentary. So like if he raises 25 basis point, I'd expect him to have good things to say about the economy. If he doesn't have good things to say about the economy, that's when it's going to get a little weird out there. And the market wouldn't necessarily expect that. So this is a big, like cover your stuff. Just expect it to be a crazy whipsaw day. And it won't be until probably Friday that we have a clean direction. But I wouldn't pay attention to too much. This is going to be intraday if you're going to be day trading, fast and furious type stuff. All right, so enough of that. So Thursday we do get GDP growth rate. This one is a big deal. So this is, if you remember, the Fed actually had negative growth rate forecasted for our economy for the entire back half of this year in a big way. And they've since changed that forecast. So right now, consensus is for 1.8. Previous came in at 2. This is going to be a big market mover also. So it may take away whatever happens on Wednesday. So this one can actually be a major market mover. Yeah, this is GDP pricing. We have pending home sales. I don't think that's going to be a major market mover. But then on Friday, look at this. Then we have the Fed's main index. That's core PCE. So remember, CPI is the actual inflation rate of like, this is what it is today. And inside that inflation rate, you have essentially supply and demand, right? So supply is your housing supply, how many cars are available, your industrial production, that's like your supply, right? And then your PCE is your demand. So how much are people actually spending? And it's like that supply and this demand comes out as CPI. But the reason that the Fed actually looks at PCE more and why PCE is actually more important is because this is the one factor that, it's the spending. It's all about the spending. If this goes up, man, it's going to be crazy. It's very likely, is very possible that PCE actually comes in at a 0 or a negative number. And that's really what we're going to be looking for if you're bullish, right? If you're bullish and you see a PCE come in at negative 0.1%, which is very possible, it does happen. Here, if I go to like a 5-year, here's your 0 line. It comes in negative. It definitely does. So if we get a negative number on something like this, that the market's probably going to skyrocket. And that's definitely like, okay, end of inflation. So Friday's PCE is really something that I'm absolutely paying attention to. Personal income, I'm probably not going to be watching that much, but very much this core PCE month over month and the rest. But this is, so to me, two biggest things. Fed rate decision, wild, choppy, let it breathe. Thursday, you might get a little bit of a reversion, but Friday is going to give you the biggest actual direction, probably for the next couple weeks until we get to that Rosh Hashanah type point in the market. All right, guys, I'm just going to do a quick time check. We are pretty close to time. I'm just going to do one thing. I'm going to pull up the indices, see where we're at, and get us some levels for the week. And then if you have anything that you want to take a look at, throw it in the chat, and then we'll go ahead and do that right now. Cool. So every week I do this. These orange boxes here, by the way, these are average week ranges. This was last week from here up to the top of that box. See how this works? This is a daily box right now. So a bit of a smaller than average week last week. Honestly, I feel like we're in for the same just because it's so choppy this week. And then next week, probably an outsized move. 450. So here's this last breakout level, 450.18 on SPY SPY. And I have this line that comes all the way back over here. This is September 2021. Wow. December 2021. This is a major level. So I'm looking for reference, right? Looking at this spot here, comes into play again there. And then watching how this price action moves. This is around 450.18. And then the big breakdown right here. So because of this, 450.18 is like very explicit number. I would say we have to hold that. We absolutely have to hold that to stay in a bullish trend. If we lose that 450.18, then I look for, remember NFP numbers, I look for a retest of this July NFP high. This is July NFP low. And by the way, if you remember when we're talking about marking this NFP levels high and low on your calendar, look at this. So this was the high, this was the low. We're like, if you get like 2 or 3 days clean above these levels, you have a clear direction. This is how it worked. You got 1 day, but it was a big day. It held and we were off. That's exactly how these work. Every month, no matter what, it's just a little hack. But for right now, yeah, we got to see. This day was the 18th of July. What day was that? That was Tuesday. So this is last Tuesday and Monday. We defended right here, 450.18 in a big way. I could probably even move this up just a little bit to this day, this closing peak. What is this going to be? And I'm on a 30-minute right now. Yeah, this is so buyers stepped in a big way right around 450. I'm just going to call it 450 as the baseline support. I would not, just to be safe, I'm going to take this level right here. Maybe this one. Yeah, okay. I like this one. So 451.93. So 451.93 was the 17th high. Retested it Thursday and Friday. Here's Friday. And so as long as we're above 451.93, it looks like this point of control is 452. Friday's low, 452.29, which happened to be that pre-market low. Yeah, there you go. This is going to be my interim for this week type of support. So if we can stay under that or stay above that, we could see, I'd say bullish for sure. Right now, I'm just looking for this type of, I'm in a short trade. I'm just looking for this trading back into it for that bounce, but maybe it doesn't happen right now. And if that's the low, then the high would take us to 460. 458.37 is a massive level as well. That is a pretty big fair value gap right over here. So from this is March 2022 high. So we're running into this little peak right here. But man, this daily candle does not look bearish at all so far. It's early. We'll see. Yeah, for this to work, it would have to turn down like right now. I'm still looking at this opening range candle from this morning, 454.50, 454.45, which is basically where we are. That'd be my stop. Oh, Tesla. Okay. So that's ranges on SPY. If you guys want to look at anything else, that's fine. I think that we could move into some of these other ones. So Tesla, remember, Tesla had that major rebalance. I'm going to pull up this article. Actually, maybe there's something new. So special rebalance here. I think this is the one I saw before. Tesla, they were 50%. And it came in. Yeah, Tesla's down. I think, honestly, I think that's it. I had some puts coming into this week from Friday, but closed out a good chunk this morning. I still have a little bit, but this has got to be my stop where we're at. So what I'm looking at right now, so this is going to be, I'm going to take a weekly view down here. We are retesting, believe it or not, a 50% retracement from the all-time high to this most recent pivot low. We're sitting on a 50% retracement. We tagged this 618 and 65. This is that golden quote unquote pocket. So if you were a bear, you're looking for a fail right in here. They did get it. So for the bulls, you really want to, you really need that to reclaim. Otherwise, if it gets any lower than that 255 ish kind of point, it doesn't really look good. At that point, we could probably be looking at a basic like fib retracement here from this low to this high. That would be like 200 at the low. And using this pivot, this would be 225. Otherwise, retesting this. Yeah, so 225 would be a really, if I get the opportunity, good spot to go long, 217, between 225 and 200. Anywhere in there. Right now, it could just go sideways for a bit. So that's why I still have some on. I'm not taking it off fully. Let's just do this, a quick fib from that most recent move. So from this fail to today's low, a 50% retracement, 275. And then you have a point of control. Just looks like just around there. So we could bounce a little bit. You're going to break structure any minute. If it gets above there, that's fine. I would probably close the shorts and then look for a reentry of said shorts either here or somewhere around here. So this would be 275. Somewhere around 275, 276. This is that prior top. I'd be looking for that to act as potential resistance and maybe a blow off to 280. But that's for a reentry of shorts. Otherwise, if I'm long over 270 up to that 280 level and trade is over. And if it doesn't break a level after that, so we're looking something like this, right? If this happens, this would be short, short, short. So you could be long here and then reentry shorts. Otherwise, if you do make it, if it does make it all the way up here, this whole thesis is probably just going higher, like straight up. But that would be over 285. I don't think it gets it all the way up there. 282 would be like maximum. I would not be short below. I would not be short above 285 on Tesla. Like no way, no how. Otherwise, if you're short now, that's cool. You can ride it. Be out like the majority for now. But put so cheap, put so cheap right now. So yeah, sure. You know, like here's the thing: if it doesn't break over this 267, it's not going higher, right? You're just retesting right now. So it is very possible that it just fails, and this fail would take us to that 245 type level. But this 256, this little volume shelf, this thing defended this morning pretty heavily. Oh, Michael's got a interesting one. So ALB, that's Albemarle. If you're not familiar with that, that is a lithium miner, lithium play. These guys are really tough. So this is a commodity play. You really have to be very focused on the commodity index, which would be DVC, right? Which commodity index itself really testing a major level today. Albemarle is lithium specifically. I believe lithium is going down. I will say that. Here's what I'd be looking at. Well, you're very close. You know, you have earnings on the 2nd. So I'd be looking at this spot right there, which is, I mean, it's on it. So this is probably why you're bringing it up right now. It is at a good spot to possibly make a substantial bounce right here. And that's what you would need to see. You'd need to see this defend and this entire level here defend. Otherwise, below, you'd have to have a stop here at like 204. Because below 204, she's just going down right now. And going down, you're likely going to blow past that. And you're likely going to come into here, 176.34. Maybe just fill this entire fair value to 180. So below that, you'd have to be looking at this level, sub 185, done to 175 for a bounce. If that makes sense. Hopefully that helps. Cool. All right. I'm going to do one. I don't think it's this week. Or is it? No, August 9th. So it's next week. So Disney, it's technically in a buy zone. Look, maybe I'm being impatient. You know, when I buy Disney, I'm probably not going to be, I don't have an intention to sell it for a long, long time. But this, it's in the bounce zone for sure. So here's the low, 84, right? This is this last low. We have not broken that just yet. Personally, I think that we probably will, just because Iger threw the stock out. You know, he just bashed his own stock on that last interview. But 86.25 is really the main level. If you're long now, depends on your time horizon. Look, if you're not selling Disney, below 150, that's fine. You're probably good. I'm looking at this very, wiki type low. It's just under 80. So I'm like 78, right? 79, 78. There's this little thing. It's very weird. Whenever a stock cracks 78, they usually go pretty close to 100, like in very short order. Disney's going to be something very similar where, again, it's retesting 80. It usually goes to $100 in very short order. Same thing here. This is 50% up, in less than a year. Did it again here, right? Call it, this is 136, to 100, 125. Yeah, a couple months, it's 60% up. And even this last time when it came in here, this is to 125, 40% in a month. So what I'm looking for on Disney is really for it to just tag that level. I'm going to have some buy orders out just under 80. And I think it's probably going to happen during their earnings report. So, rarely do I say like, hey, buy after hours. But like if Disney just gets this epic flush under 80 in the post market, just no, I'm going to probably be picking it up. So cool. All right. I think we're good for now. Let's see one. I haven't put it out yet, but I have this oldie but goodie on watch for sure. ZBRA Technologies. Nobody talks about this. Haven't for a really long time. I still doing some DD on this. These guys, what they do is like they used to be big in IoT. Essentially, it's like they do. Like if you're at a hospital, they put all the little serial numbers on every little component. They're not a small company, believe it or not. They're actually a really big company. Let's see, $16 billion market cap. But this is one where like, okay, this setup looks really interesting to me on a weekly basis. I want to pull back just under 300. And I'm really looking at this 280 level. Oops. To start loading. Yeah, 287. Anything under 300. It's 305 right now, so it's not. I'm not jumping into this, but I want to see this kind of pullback. Where's my fib tool? Here. Yeah, just right in here. Just under 300. If I get that with some constructive price action, I'm seriously looking to start adding this. I might add if I get that before earnings, just a little bit and do like a partial before, partial after, and then kind of like reassess. I think this would be one where like, look, I missed sending. I sent it a long time ago, but it's RH was one where I'm like, oh my God, this housing sector, it was just a huge. I did go along here like 270, and it popped to like 350. But this last one, man, I just missed the whole boat. So apologies on that one. I should have resent it, but it was just like this thing has just moved. So I don't want to miss this type of mover. ZBRA tends to be something like that when it gets going. So we'll likely see it. This is up 40% already in very short order post earnings. That trigger was 265 and missed it. Missed it. I don't want to miss the next one. This thing looks like it's running, man. Damn it. All right, guys. Cool. That's it for me. Appreciate everybody showing up, and I will see you guys out there. We got to do, we have a couple like spaces this week too. So I'll be on with Wolf later on this afternoon. And we have a handful. I've been hopping in on Jordan's morning trading sessions also. So those have been good. Oh, someone pinging me, Baba. Yeah, Baba. So earnings here, FXI is the index. This whole index, major consolidation. Major consolidation. The index hasn't really popped off just yet. It was Baba, big one today. This looks like it's going, but I don't know if this one's going to have legs just yet. It's a big deal, but Pinduoduo, another one, same, very similar setup. Actually, this one looks a lot stronger coming to late August earnings. So these are good. There's no earnings in your way. JD. Yeah, all of these kind of Chinese names, they're kind of at that first target though. So initial bounces, we got to see if they follow through. I'm not in a rush to hop in on these. Someone's talking about XFang earlier. Man, that thing has moved. And Neo, a lot of people super bullish Neo. Let's see. Oh yeah, Neo's got a little bit of room. They don't have earnings for quite a while. Yeah, you ran into some overhead resistance. $12. They're a bit high for me to hop in at this level, but they all look super constructive. Even Baba. This breakout is here, 96.90. Yeah, just because they're running into this overhead supply, it's like, you know, it's not really holding it just yet. Nice bounces, but that's a major supply zone. Right in there. Tough. All right, guys. That's it for me. I will see you on the next one. Adios.